Important things you need to know about credit cards, credit scores, and APRs. Sometimes, no matter how much we plan our expenses, there will be some unexpected costs that we need to cover, no matter what. One of our best allies in taking care of these unexpected mishaps is a credit card. Additionally, credit cards are not just for emergencies, but can also be used to maximize what our money can do through special perks. In this video, we will talk about credit cards, credit scores, and the different types of credit card. So stay tuned. Hi, welcome to RC Finance Guide, where we'll be talking about the topics of handling finances and making money. We will upload videos to the channel for your watching pleasure 4 to 5 times per week. If you have any feedback or comments about the topics you would like to see, make sure to comment them down below. Also, make sure to press the subscribe button and hit the notification bell to be updated on all of our latest videos. If you have any further questions, you can comment on them while I work. A credit card is a thin rectangular piece of plastic or metal issued by a bank or financial services. It allows card holders to borrow funds with which to pay for goods and services with merchants that accept cards for payment. Credit cards impose the condition that card holders pay back borrowed money, plus any applicable interest, as well as any additional agreed-upon charges, either in full by the billing date or over time. Credit card versus debit card. It is important that you do not confuse a debit card from a credit card. Debit cards take money directly out of your checking account. You can borrow money with debit card, which means that you can spend more cash than you have in a bank. On the other hand, credit cards allow you to borrow money and do not pull cash from your bank account. This can be helpful for large, unexpected purchases, but carrying a balance every month means that you'll owe interest to the credit card user. In addition to the standard credit line, the credit card issuer may also grant a separate cash line of credit to card holders, or LOC, enabling them to borrow money in the form of cash, advances that can be accessed through bank tellers, ATMs, or credit card convenience checks. Such cash advances typically have different terms, such as no grace period or higher interest rates. Compared with those transactions that access the main credit line, issuers customarily preset borrowing limits based on an individual credit's rating. A vast majority of businesses let the customer make purchases with credit cards, which remain one of today's most popular payment methodologies for buying consumer goods and services. Credit scores have a big impact on your odds of getting approved for a credit card. It is a number from 300 to 850 that rates a consumer's credit worthiness. The higher the score, the better a borrower looks to potential lenders. A credit score is based on credit history, number of open accounts, total levels of debt, repayment history, and other factors. Lenders use credit scores to evaluate the probability that an individual will repay loans in a timely manner. A simple way to boost your credit score is by building good credit history by making regular, on-time payments, avoiding late payments, keeping credit utilization under your credit limit, and maintaining a low debt-to-income ratio. By making responsible purchases and paying them off in a timely manner, a credit score will rise, making a consumer more attractive to other lenders. If you have concerns regarding your credit score being inaccurate or biased, know that you are protected by the law. The Equal Credit Opportunity Act, ECOA, is a federal civil rights law that forbids lenders to discriminate against loan applicants for any reason other than their ability to repay. Specifically, ECOA protects consumers from discrimination based on race, color, religion, national origin, sex, marital status, age, eligibility for public assistance, or the exercise of any rights under the Consumer Credit Protection Act. Do you own a credit card? How do you manage and monitor your credit card use? Tell us in the comments section below. Before we move on the types of credit cards, it is important to understand what APR means. An APR is also known as annual percentage rate. This is the amount of interest that you owe credit card issuer or any unpaid balance. You'll want to pay close attention to this number when you apply for a credit card. A higher number can cost you hundreds or even thousands of dollars if you carry a large balance over time. Aside from the APR, there is also an annual fee. This is charged by the card issuer to extend the credit card to you. Some cards don't charge an annual fee, but others, most often cards that offer rewards or incentives like cashback, can charge annual fees ranging from $50 to $700. Now, let's take a look at the different types of credit cards. Number 1. Travel Rewards Cards. These credit cards offer points redeemable for travel, including flights, hotels, and rental cars, with each dollar you spend. Travel credit cards are the best way to enhance trips using the dollars you'll spend every day, whether you're on a budget backpacker or a business class loyalist. A travel credit card can also offer everything from hotel and flight credits to luxury perks like upgrades and lounge access. But many cards come with strings. Some charge annual fees, while others set strict rules on when and where you can redeem your hard-earned points. This is something that you might need to consider before selecting your preferred credit card issuer. Number 2. Cashback Cards. A cashback credit card provides a percentage of cashback when you purchase a qualifying product. Some cashback cards provide a flat rate on every purchase you make, while others may pay a higher amount on specific bonus categories. When choosing the best cashback credit card, you'll want to consider a number of variables, including the cashback rate, the annual fee, and if there are any assigned bonuses. You will also want to determine if you want a cashback credit card that provides a flat rate on all purchases, or one that offers a higher rate on particular bonus categories. So far, we have covered 2 kinds of credit cards. Do you have any of the 2 kinds mentioned? Tell us about your opinions and experiences in the comment section below. Also, if you like this video, please do not forget to give it a thumbs up. Number 3. Balance Transfer Cards. Balance transfer cards can allow you to move accumulated balance from one or more higher rate credit cards to one with balance transfer offer, potentially saving you hundreds or even thousands of dollars in interest charges. The best cards for a balance transfer are those that drop the annual percentage rate, or APR, to 0 or close to it. Do so for an extended period of time. Additionally, the credit card companies that keep transfer fees minimal and make it easy to conduct a transfer are preferred over those that make you jump through hoops. Number 4. Low or no APR cards. Credit cards with 0% APR offers can help you extinguish existing debt or a lot more time to pay off large purchases. These cards offer no interest financing for a set period of time before the standard interest rates apply. If you can pay off your balance before the promotion expires, you can avoid paying any interest on those balances. The best 0% APR credit cards offer longer promotional periods and low fees. An added benefit is the ability to earn cash back or enjoy other perks with reward card holders for keeping the card past the 0% APR offer. Many of these cashback credit cards offer a bonus reward when spending on dining, travel, groceries, and more. 5. Secured Credit Card. This is a type of credit card where the card holder secures the card with a security deposit. Such cards offer limited lines of credit that are equal in value to the security deposits, which are often refunded after card holders demonstrate repeated and responsible card usage over time. These cards are frequently sought by individuals with limited or poor credit history. As you can see, each kind of credit card has perks and limitations that need to be considered. If you do not have a credit card yet, you may also want to choose based on your needs. Others may opt to own different credit cards to suit a variety of transactions in their day-to-day life. To summarize, here are the key takeaways from this video. Credit cards are plastic or metal cards used to pay for items or services using credit. Credit cards charge interest on the money spent. Third, credit cards may be issued by stores, banks, or other financial institutions, and often offer perks like cashback, discounts, or reward miles. Your credit limit, perks, and chances of being approved for a credit depends on your credit score. It is important to maintain a good credit score. Lastly, there are different kinds of credit cards that can help you for different needs. Well, that's all the time we have for today. I hope you found this video informative and useful. Please also share your personal opinions and experiences regarding credit cards in the comments section below. If there are also other topics related to finance that you would want us to cover, do not hesitate to inform us. Don't forget to like this video, hit the subscribe button, and turn on the notifications bell to keep you posted on more informative videos like this.